Wonderful. Well, great. I've only got 45 minutes, so I won't waste any time. Thank you for that as well. Just before I begin, I'm going to pop my email address into the chat box if you want to take that for your reference. It's sevans@tradingacademy.com. I just typed that in for the group, so you've all got access to that there, okay? sevans@tradingacademy.com. If you have any questions about what I'm talking about after this webinar, please let me know. Just a very quick thing about myself. This is me, and you can see on here, Sam Evans. I'm one of the master instructors for Online Trading Academy. I know that you're probably familiar with my colleague, Sam Seiden, who's an individual who I trained with around just over 5 years ago. He actually is a good friend and colleague of mine as well. Somebody who I worked quite extensively with on the curriculum at Online Trading Academy Teach Worldwide. So I'm very familiar with it myself. Also, I know my articles get circulated on here on a weekly basis, and Rick Wright and myself would like to extend the thanks for getting the nominations and the award for the Forex Best Educational Content Awards in 2013 by FXStreet as well. As well as trading all the different markets, commodities, Forex, futures, and so on, I want to really kind of make sure that I work very closely just on the Forex side of things here as well. I extend, obviously, any questions out to you guys as well. So please let me know if there's anything you want to speak to. But the topic that I really wanted to talk about here, and I'm going to just work on the charts, going to make notes on the charts here, was looking for institutional opportunities. Okay, I'm going to go to some charts. Can you just check that you can see my my charts quite clearly here? I'm displaying on TradeStation here a 360-minute Euro USD chart. Let me just expand that as well so you can see that quite clearly. Wonderful. Excellent. I'm just going to make sure that the font is a little bit clearer for you all as well. There you go. Let's just make sure that's coming up a little bit clearer so you can see where I am. That should make life a little bit easier for you on the eyes. I'm going to predominantly be focusing on the big picture here. As you know, obviously, this is FXStreet, and we're all Forex traders in the room. I've been teaching for about 8 years now, 7,000 odd students worldwide through the academy in the UK, Europe, and the US as well, in the Middle East. And I would say that for all the students I've worked with, and a lot of the majority of the people who I've worked with, a lot of the same similar mistakes seem to occur with people trying to go down to too small a time frames. And one of the things I really want you to understand on here, if I can kind of really just get as my message across, is Forex, it's a waste, I think, to trade Forex just on too small a time frame and waste the fantastic opportunities that it does provide. This is a market that you can see, even one of the quieter markets like the Euro USD that we have on here on this daily chart. We can see that in the last couple of weeks, this market was as high as just shy of 14000. It's been as low as 136, 400 pips in literally a very, very short space of time, actually, just over a month. And you know, I meet a lot of traders who are coming and going, look, Sam, if I could just make 20, 30 pips a day, I'd be happy. Well, my attitude is, well, making 20 to 30 pips a day can be a lot more challenging if you don't have the skill set. Whereas actually making 100 pips, okay, 150 pips per trade with a little bit more of a set and forget can be a lot more safe for you and a lot cleaner for you and a lot easier to do as well. Not only that, this is what the biggest institutions do. Online Trading Academy, we teach a core strategy, which is about recognizing institutional levels of supply and demand. And when we do this as well, we're thinking on the big picture. I can't stress enough, the big picture is where all the real action is taking place. Institutions have to trade on the bigger picture. I know from myself because I've been on that side of it many years ago as well. And the institutions have to execute on those larger time frame charts. So it's a good idea, firstly, to get an idea of where you are on the larger time frame charts. And by getting a good idea of where you're on the larger time frame charts, you can start to zoom down into it, should I say, and start to really find those key opportunities that are on the smaller time frame charts. But we'll get to that in just a second. The first thing really that we want to understand, though, is what's a good market to trade? What I've included, and I'm not a big indicator fan, what you see in front of you right now is pretty much my setup that I would use on a daily chart. I'm not one of indicators, but I want you all to notice the average true range down at the bottom here. Is everybody or anybody here not familiar with what the ATR is, or you are? Okay. Yeah, bigger picture, daily, weekly, and monthly. I mean no less than a daily, Black Cat. Yeah. So I'm talking about those big ones on there. And I'm talking about always understanding that really, as a day trader, you should be aware of where you're on the daily charts. As a swing trader, you should be aware of where you're on the weekly charts. As a position trader, you should be aware of where you are on the monthly charts. Does that make sense? Yeah. So daily is really good for, if you like, those intraday opportunities. Weekly for more your set and forget stuff that you're going to be doing, a couple of trades a week maybe. And then we can start to bring in the monthlies for the longer term. So the simple process is really, the way I look at it is one trade. If you look at, this is my own screen. I'll come back to ATR in just a second, but what you see in front of you right now, this is my own trading workspace. I've actually just added on I've just literally added on a little radar screen here, but I'll explain why in just a second. But what you see in front of you right now is basically my my workspace for when I do my Forex analysis. So I've gone to a daily. I typically go a little bit bigger than that. I go weekly, but again, I'll come back to them in just a second. ATR, you'll see this at the bottom. Average true range will give us the average range of basically the last candles, in this case, 14 periods. So it's given us the average range of the high to the low of each one of these candles. What I think surprises a lot of people, because I mean, one of the things I know with a lot of Forex traders, they all trade Euro USD. I can tell you guys, I don't remember the last time I traded the Euro USD. I don't remember the last time I traded it. Just because everybody trades it and just because it's one of the more popular things doesn't necessarily make it the best market to trade. Here's the reason why. Take a look at the ATR right now, guys. The ATR is reading 49 pips. That means over the last 14 days, we've only had a range of 49 pips. Now, if you're one of those people just trying to squeeze out 30 pips a day or something like that, you're looking to squeeze out over half the market's range a day. When you take a look at that ATR in that way, you're thinking, this is more challenging. When you consider that the ATR literally a little while ago, at the start of the year, basically was nearly 100 pips a day. So what we're seeing is a market that has contracted. Now, I want to trade, like I say, like an institution. I want to look at where the big numbers are coming in. And sure, institutions trade the euro dollar, of course. But what I first want to do before I can get into the institutional side of things is where are the best opportunities for me to trade? If I look at a market that's only got 49 pips a day of a range, that's not necessarily the most attractive thing for me. Why? Because it's not moving as much. Take a look at the weekly chart. Now, the weekly chart's 150 pips, much better. Now, if I'm seeing that on average from high to low 150 pips, now I'm starting to see that there's more opportunity. If you go back to basically this time last year, we see ATRs were way higher, 250. So the first thing that I'm going to do is I'm going to show you two techniques on this, finding the best things to trade. Guys, okay, absolutely volatility is down on all pairs. So that's my point. Why trade the pairs with the lowest volatility? We need to actually trade the markets that have the greatest level of volatility that actually move. And this is where I think a lot of people will focus on these majors that just aren't moving. If we take a look at this radar screen, I'm just going to pop this up for you. I'm going to insert on this radar screen here, ATR. In fact, the easiest way for me to do it will to be scanned through it on the currency pairs. Let's take a look here. Now, if we take a look, I'm going to expand this on here. All right, 150. Let's start looking at markets that maybe have a creep. Aussie dollar, another one. Look at the narrow range that we're in on the Aussie dollar at the moment. Heavily tight on here, 150 pips a week. Let's go out to the cable. Pound dollar on here, 165, a little bit better. Let's take a look at the pound yen on here. 259. Now, if you take a look at 259 on here, what you're going to see is now you've got a market that's ranging. Okay, now you've got a market that's ranging, but you've also got a market on here, 259, it moves a lot more. High volatility doesn't give you a second chance. Second chance at what? Volatility only hurts people who are trading in the middle of the ranges. If you'd have just been shorting near the highs of the pound yen, and this is what we do at Online Trading Academy, is we look to the highs and we lows. What you need to understand about volatility is your friend, George, if you wait for the absolute extremes. The problem that most people do is they trade in the middle. Okay, now I run live trading rooms and students work with me on these things, and we see that wherever we're trading, you got to understand a market is going to have more volatility in the middle area because there's more movement in the middle area. Okay, so what we need to do is start to find markets that move a little bit more, because what would you rather do? Would you rather be short near highs or long near lows? Okay, short near highs or long near lows, where you've got the best chance of making a couple hundred pips, or would you rather be trading in the middle? Take a look at these highs here. Take a look at these lows. Okay. Okay. Or would you rather be trading here in the middle? Okay, where you've got more fluctuation. Let me explain. Anybody here familiar with the bell curve theory? And I'll answer these questions as we go through. Anybody here familiar with the bell curve theory? Yeah? I'll never trade blindly. No. Never want to trade blindly on anything. Yeah? All right, cool. So let's just kind of mark this off on here. Okay. In here on a bell curve, basically, and this is only what Bollinger Bands do. Here in the middle of a bell curve, right here in the center, prices fluctuate the most. Okay. Price spends around 96% of its time here in the middle of the charts. When prices are at these extremes, they typically want to pull back to the middle. If anybody's ever looked at any kind of market profile before, they'll see that this is something that you can see on market profile. Most traders spend most of their time trading here in the middle, getting chopped to pieces. So what we do at Online Trading Academy, what I teach my students to do, what Sam Seiden teaches his students to do, is buy and sell near supply and demand areas where institutions have been buying and selling. Okay, because institutions are trying to get in at the extreme areas here and here because of the imbalances between their buy and sell orders create these highs and these lows. So when I talk about extremes, what I'm meaning is near absolute highs and near absolute lows. So if you go down and take a look at the pound against the Japanese yen, and I'm going to zoom into this on a smaller time frame right now. These lows, let's put these lows in 167.55, 173. So let's put these highs and lows. In fact, what I'll do is I'll change this to a smaller time frame so you can see this range. I'm just going to swap it right down to the next time frame on here. There you go. So here's that range now that we were just looking at on here. Okay. Now, here in the middle of this range, if you kind of basically just put down an area like that, and I've marked up 50% on here, this is where the most chop's going to come. This is where the most chop is going to come. Therefore, what I like to teach my students to do, and what we do at the academy, is to try and get people buying or selling as near to these areas and as near to these areas. Why is that? Why is that? Because if I buy near these lows and sell near these highs, what does that do to my profit margin? What does that do to my profit margin? Increases it or decreases it? Increases it. Absolutely. Much better margin. So what we want to do is, this is the key thing about the volatility. Like, this was incredibly volatile, this market. Let me show you here. Market was incredibly volatile early March when it came to this area here. The market was very volatile when it came down to this area here, wasn't it? However, what you need to understand is, do you see how those candles pierced and then dropped like a brick all the way back down again? You see those? Okay. So what we want to do on here is, if we go back to our weekly chart and see, the first thing to do is to understand, well, look at this market. Look what it's been doing the last few months. It's been down, up, down, up. It may be 260 pips on here, but instead of wasting my time trading around here in the middle, I'm going to go to the smaller time frames to find levels of supply and demand. Let's talk about the candlestick patterns again. Let me show you what a typical setup would be for us. Okay. So what I want you to do is to focus on this area right here. What I want you to do is to focus on this. Yeah, you see this drop that we had away from here? Okay. Now this drop that we had away from here, there's a little area I want you to see right here. And this little area right here, right, exactly. I'm looking to be more short in the middle area, short above and exactly long below. That's correct. So why I'm extending looking for is these extremes. Now, let me show you what this is. What does this area tell me? Okay. And I'm going to try and put as much as this I can. What does this area tell me? What this area tells me is when prices came to this area at the 173 area, this was 173.03. Do you see how we literally dropped like a brick from this particular zone? Do you see how we dropped like an absolute brick from this zone? Does everybody see that? Yeah. Well, that tells me two things. That tells me, one, if the market was in an uptrend, which it was, going up to this area, and then had a basing pattern and dropped as hard as it did from 173 all the way down to around 163, that's a pretty important area. And how can I say that? Well, that's likely an institutional area of supply. Okay? This is likely an institutional area of supply. Now, how can I say that? Well, one, because I don't think myself, my other focus is the base before the huge drop black cap. You see the little base? You could have your base like this. I like to look for the little consolidation pattern before the drop. Okay, so if you want to have your base around here, there's nothing wrong with that too. Okay, I always like to go for the smallest candles before this strong drop. Because what this is telling me is in this little base, there was a battle going on between the buyers and the sellers. The sellers won. How do I know that? The sellers won because the buying all dried up and someone was trying to sell a lot more than they were able to sell. They were willing to sell more than they were actually able to sell. There were buyers in the area, but not to cover all the buyers. If there were enough buyers, if there would have been enough buyers in there to satisfy the sellers, what would have happened? Prices would have just stayed in that area. So one, I know that there's an imbalance between the buyers and sellers. The second thing I also know, okay, the second thing I also know about this area is this is likely an institutional area. Why? Because only an institution could push prices down as far as this from 173. Only an institution. So now I know that it's institutions that typically make the highs and make the lows. Because now we always want to buy the lows and we want to buy the highs, right? Sell the highs and buy the lows. But when I now know that I've got an area where the market's shown me some of the biggest institutions were in play, now I know what I've got to do with it. That's an area where if the price comes back to that area again, I want to be shorting. Do you see? This is an area which is a very, very key point, and it gives me a clue about where the extremes are. See how 3 times now the price has come back to this area and constantly fallen away. In a range-bound market, what we've got to do is we've got to look for where these strongest drops are, because they're like the peaks of our bell curve. They are the peaks of our bell curve. Now, looking to the downside on here, we've got the same thing here. We've got the area where very powerful, strong rallies came into place. See around here. Let's look at the pattern. We dropped in here, there's a base, and then, boom, we've got this huge move away that carried up to these highs. Isn't it interesting how every time price got back near to this area again, we've had a strong rally from the area? Didn't quite make our area. But once it came back to those extremes, we formed another new area of demand right here, which did give us another pullback and another rally. As we creep up higher to these extreme areas of supply and demand, though, we have to anticipate that there are going to be turns in these prices, okay, until the market breaks into a serious range. Likewise, look, nearer to these areas of supply, major areas of supply, the market's rolling over. Near to these area majors of demand, the market's rallying. Okay. Yeah. So while we've got volatility on here, we've got a nice range that the market sat in. If it breaks out of this range, I'm going to come to the questions in just a second, guys. I'm not ignoring them. Let me just go through this point. If the market breaks out of this current area of ranging that it's in, what's going to likely happen is we break out of these areas of supply, the market's going to likely rally to the next area of supply, a little bit higher, which is up here. Okay, way up here. If we break out of this area to the bottom, then we will expect a trend to the next area of demand down here. For now, what the market is doing is the market is making its mind up. What do I want to do? Am I going to be breaking on to make new highs? Or am I going to break out to make new lows? This is basically a stage 1 or a stage 3 accumulation or distribution phase with a high level of volatility as the market's making its mind up. Look at what the weekly chart is telling us, guys. The weekly chart is telling us there's indecision. So by knowing where we're on that weekly chart and knowing we've got plenty of room to go to the upside if we break out to the next area where the huge drop happened, or where the institution stepped in on mass down at this area, prices are going to stay in this area. We respect the ups and the downs that the market's putting in. We respect the supply and demand that's there, and we only buy and we only sell near those areas. Okay? So what I'm looking for constantly is any new area of supply or demand to form. So areas of demand, okay, areas of demand, trying to get near these lower areas. I'm not interested in anything here in the middle. I want to be up as near to supply here. In the meantime, looking for shorts as they're forming on smaller time frames, or looking for demand areas as they form. Now, let's just take a look at the questions. Do trend lines carry equal weightage just as a horizontal zone? I personally don't use trend lines, and I'll tell you why. I'm not very good at them. All right, it's as simple as that. The thing with a trend line I've found is you could draw your trend line to those two lines there, or you could draw a trend line to those two lines there. Okay, what one is right? And in a trending market, you're going to get trends within trends. The reason why I like to pay attention to my horizontal supply and demand zones is a very simple thing. It's purely because what that does for me is it makes my life a lot simpler. And I can clearly see where the selling pressures came in and where the buying pressures came in. The risk is also smallest as well. The reward is also greatest. Okay. The strongest moves are what I look for to identify the base, which is demand and supply. That's right, Black Cat. I'm looking for those very powerful moves, those very strong rallies away from those areas. The lower they are, the bigger picture, the better. The higher they are on the bigger picture, the better again. Because all you're trading against here in the middle is a lot of the chop. You know, institutions have already weighed up a big position at this particular point here. So therefore, if they've already weighed it up, I need to understand as that trend is developing, that trend, if this lower area holds, is going to reverse, and then we're going to go back into upside mode again until the market tells me otherwise. George is just saying, what do you do when you take positions in the extremes of the range and then the price breaks out? Okay, I get stopped out, and I'll look to where the next major area of demand or supply is. Yeah, okay. And what I will do is reassess it. Okay, absolutely reassess it. So, for example, I'll play this range, George. Okay, these zones represent my risk. Okay, so I'll play this range until the market tells me otherwise. Should we break higher, we're going to have plenty of room to go. I mean, like, there's another key supply area here. If we do break higher, we're going to have to deal with this zone here. Now, the last time price was in this area, you see this zone? The last time price was in this area here, and we've not been back here since it formed. This is what I call a fresh area. I do like it when the price comes back here for the first time. The price base, there was a huge drop away from it, telling me there were more willing sellers than buyers in this zone. So if I take a look at that area here, and if we do pop our head above this area of resistance that we're at the moment, and we trigger in that zone, Let's just take a look. Don't know why it's not letting me put my numbers on. Let me just show you what the risk and reward is. That would be entry around 174.50, stops above 174.84. Not a very big area. Not a very big area. Call it like 34 pips. Call it 40 pips. And my first target would be around the 172. Next target would be around the 169s. If it stops out, then I'll expect the trend to continue to the next area of supply, and then I'll be in trend following mode. But until that happens, guys, I'm going to respect the range as it is. Listen, I never know what's going to come next. So I listen to what the market's telling me. And when I listen to the market, then it takes the guesswork out. Okay? So how many revisits? Until they're broken, basically, Dr. Rob. Yeah. Until they're broken. They say the best trades are those with the trend, but I see you're picking tops and bottoms. Isn't that risky? Well, it's risky. I don't know how people trend trade, to be honest with you. I've done all the trend trading in my over the years. I've been doing this for 10 years now, and I find not understanding the big picture to be the riskiest thing. See, the problem you've got with a trend is a trend is something that's already happened. You understand? Let me take you over to a chart and show you what I mean by this. And by the way, before I cover this, I've got about another 15 minutes. Let me just say this. The best things to do to find the markets that move are check these ATRs. It's a personal thing. I don't look at markets that do less than 220 pips a week on the ATR. Okay? I prefer to trade markets have at least 220 to 230 pip weekly ATR ranges, because that means therefore that I'm going to get bigger moves and I'm going to get better moves. Do you understand, guys? So I want to, if I'm going to bother put my trade on, I want to have a trade that's actually going to move a little bit. All right. All right. So I would say to you, if you use the ATR, this is why the thing I'm enjoying trading most of the time here. Markets like pound Aussie. Take a look at the pound Aussie on here. You see the pound Aussie? Trade the bigger moves, right? Pound Aussie, 309. Pound New Zealand. Take a look at this one here, 317. Yeah. All right. So let's just take a look at Aussie dollar. Just show you something on the Aussie dollar while we're on the subject of trend. Okay. So how do I manage the trade? Do I trail my stop closer because you'll let the market hit you up? I'm an all-in, all-out trader. I just basically go with it. I don't like scaling out and taking profits. Not interested in that at all. Basically, all I want to do on here when I'm trading is go with it, and I'll trail the stop after basically halfway, like cat. Play it after him. So if the corrective pattern is an expanding wedge, you lose every one of those trades. If it's an expanding wedge, well, the market's only going to go to where the levels are. So the market's only going to go to where the areas of the supply and demand are. So what I'm going to save myself having to take tons and tons and tons of trade. I'm just going to take a shot at the very best trades that I can find. So for example, this is a trade I'm in at the moment. Okay, on the Aussie dollar, Aussie New Zealand. Let me show you it. So down at this point here was the first entry. Now, we're talking about trend, right? The trend on this chart, if you take a look, been in quite a long-term downward trend, right? Would we agree that this has been in quite a long-term downward trend on here? Yeah? Okay, so that's all good to know, but the trend's already been going on. So suddenly we've had quite a correction. That long-term downward trend since basically the start of this year is now basically been in a nice upward trend, hasn't it? Yeah? And no, I don't read any newspapers. I don't remember the last time I looked at a newspaper or anything. I don't believe in the fundamentals. I think Price has nothing to do with the fundamentals. It has to do with people just bothering to trade. So I don't bother with it at all, no. I just trade the price and the price alone. I'm just looking to be right on a couple of trades on here. Okay, I'll get to that question in just a second, James. I just trade the prices. That's it. Make my life a lot easier. Now, was there a heads up, by the way, that we could have seen this reversal, this like correction in this downward trend? Well, only if we were looking at the bigger picture. If you actually take a look at a monthly chart, remember what I said to you, what this was all about. This chart, this is all about this webinar, understanding where the big pictures and the institutions are, right? Well, let's just take a look at something. Now, I don't know if I've got enough data on here to show you. Let's get a little bit more data. Okay, great. Guys, keep the questions coming. I'll get to them, okay? Now, I haven't got enough data on this particular platform. But basically, what we've been seeing on here is back in 2008, this market rallied heavily. This is Aussie, New Zealand. We've been in this downward trend coming to here. You can't see it on this chart, but going back, we've been to these lows that we've been to before. Yeah. And what actually happened was we got near to these area here, and the market produced a huge move away. See this demand area? It dropped at base, and then there's this huge rally. See this strong rally away? We got back to those old areas of support. Then the market put in a massive, it's almost like the institutions are saying, hey, you know what? I want to start buying this thing up again. So the market then came back down here again, and this was around March time, and it held these lows and started to rally away again. So I'm like, well, all right, now the buyers are stepping in. We've got this double base on here again. My job is now to assume that if this area here holds, we're going to probably start creeping our way up higher, looking for the next area maybe of supply where the last big amount of selling came in up at this area here at 114.15 to 115.92. So I've had to anticipate the trend in the change because some demand started to creep in on the weekly charts, much bigger time frame charts. And when the much bigger time frame charts start to tell me these things, I've got to start respecting them. So therefore, all of my job is then is on the 4 hour, on this smaller time frame chart to start now focusing to try and get long near these bigger picture areas and then ride that trend up. Because the biggest institutions have to trade on these longer time frame charts. And when we look at a trend like this, if you take a look at this trend that we're on at the moment on the Aussie New Zealand, we can see we've already had quite a strong move off of here. Well, the easiest place to get into it was where the demand came in this previous area here, which was the first entry. And then it was about being patient enough to wait for the second entry. The most recent entry I got on this was at this area here. And these are both areas of demand. Now, I am trading with an overall trend. I just anticipated that the bigger picture would put this into a new upward trend. So when I was teaching my live room, the first entry that we got off of this chart was here. And then the next entry for a pullback into this market was again here. So this was an entry at 707.50 odd. We're now at 0967. So we've had a couple of hundred pips on here looking for maybe a continuation in the price. But look what happened. The last time I said, do you see this explosive move away that happened? This very straight, random, powerful move. Well, that tells me that this is a good time for me to be buying, to rejoin this new upward trend that's taking place because we're lower down on the bigger picture. And if I'm less, the problem is if I miss this previous area here, I got to be patient enough to wait for the price to come back again and then re-engage the upward trend. And now if this trend can actually continue, we can close above these highs. We're probably going to see 112 as the next target and 114 as the next. But all that told me that is that I'm starting to see buying pressure coming on the bigger picture charts. So I'm using a smaller picture chart. Exactly. I'm using a smaller picture chart to get me in on it nice and cheaply. And there's plenty of engine. It's just waiting for one of those important demand areas to get you in. Like here, if this market pulls back, I'd be looking at a zone like this. Some serious demand stepped in at this particular point. So as this new trend is developing, if the price pulls back to this 108.71 to 108.56 area, this could be a new add-on point for a continuation. Before it can even get through that, we've got another little explosive move we've got to get through right here too. So I'm just looking for these points. Obviously, the later and later and later I join the trend, the tougher it gets. Okay, 0937 to 0927. Not huge risks, guys. All I'm trying to do is jump on board that bigger picture move. Yeah, buy and pull backs to the demand areas. Absolutely. Until I get to 112, which is the next supply. If that breaks, I'll ride it up to 114. But this big picture chart's going to tell me where the turning points are. All I'm really trading is this weekly chart, trying to get in on this cheaply and then leave it alone. Yeah? Because the whole thing is, guys, I've got to keep the risk very small. And then when I'm in there on the right side of the market, I leave, you know, I've got 200 odd pips on this trade at the moment. I'm in a position where I just want to leave it. The other trade that I took at the moment is the pound Swiss. We go over to the pound Swiss and take a look. Again, let's just take a look at it, and I'll do some questions in a second. Stops below the zones, absolutely, yeah. Stops below the zones, guys, right. Now, pound Swiss, I've got a bit of breathing space on because I got short on the pound Swiss at 51.10. At the moment, we're about 100 pips up on it. This one is a little bit more volatile, but just look at what the chart's telling me. Okay, the last time I was at this area here, every time the market comes to this area lately, it sells off. So therefore, you know what? Here's a nice weekly candle. I'm short on it from this last week. If this market holds and we're already in a nice red candle, my attitude is, well, all those people who studied the chart patterns are going to say, hey, look, we've got a bearish candle on a weekly close. This is probably going to go down to around 148. Well, I'm already in it, right? Because my risk is cheaper at the absolute highs and at the absolute lows, because then I've got more profit margin in between. It means I don't have to be right as much. Does that make sense, guys? So I'm just telling me where I'm on the weekly chart. Every time price keeps coming to this area here, it's fallen. So why not make the assumption it's going to fall again? So take the trade, trail the stop on it after a little while and see if I can run this thing down a little bit further. I'm not trying to be clever. I'm just trying to be smart and saying, hey, I'm not going to get it right that often, so I want to be right in a big way and wrong in a very small way. Does that make sense, guys? Yeah? I'm going to go through some of these questions on here, okay? I answered one about the fundamentals. Yeah, the fundamentals for me is something that's already happened, so I tend to avoid it. I mean, in my XLT I did on May the 8th, you know, we got the high of the euro at 39.90. We shorted at 39.90 off of that in my trade room before even they came out with the ECB said that they were going to lower rates. So we've been in a position trade up 400 pips on the euro dollar already for a month now. We got into it 3 hours. We had our level set 3 hours before because that's what the chart told us to do. So trust me, it's not because I'm clever. I'm actually I'm a bit of a simpleton, I think. I'm too simple. That's the thing. I'm very, very simple about it. So if I see it's cheap, I buy it and I have a tight stop. If it's expensive, I sell it and have a tight stop. And then I leave the trade leave the trade alone, guys. That's what I do. Okay. Since you're based in the UK, do you use a spread betting broker to take advantage of tax on normals? I actually use FXCM. I chart with my trading because I trade everything, options, futures, and so on. But I trade through FXCM, and they actually come under spread betting, James. Yeah, FXCM. Month-end flows, how does that affect my decisions? I don't really think about it. More and more things that take me away from just looking at what the price is, I stick away from as well. Okay. Sam, with the longer term trades, how do you cope with your emotions while the trade is active? Tend to get anxious and exit too soon for a small profit. Great question, Manoj. Basically, I've been there and done that myself over the years. So what I now do is I literally check the market twice a day. I check at 8 a.m. and I put my orders in and do my analysis, and I check it again at 8 p.m. at night to see if I need to update it, and I stay away from it. I just stay away from it. I only check the charts twice a day when I do my Forex. I'm a day trader as well. I trade the US futures markets, NASDAQ, and I do options and that. But for my Forex, I just put the trade on and leave it alone, basically. And by doing that, it makes my life a lot easier. Let me just try and find something. Just a second, guys. Let me just see if I can get something up for you. Hold on a minute, guys. Just bear with me a second. All right. Actually, let me cancel that off. I'm just trying to find something for you I can do, and then I will go through the go for some more of those questions. Okay. Correct questions. Just going to go through on here. Let's check on here. Can you explain fresh area fail? Obviously, right? Obviously, yeah, absolutely. If basically, if the level gets broken, it's no longer valid on here. Forgetting about it, yeah. Yeah, I'm always having my stop below the demand zone or above the supply zone as well. Basically, black cat, yeah. And eventually, a fresh area is going to fail. So that's it. I'll lean on it until it fails, basically. Dr. Robbie, you consider any Euro Aussie trades now? Now, example, 1 hour or 15 minutes. Let's take a look. Oh, hold on a second. Sorry. It tends to be high on the ATR. Let's take a look at Euro Aussie then. There you go, 261. Nice. So at the moment, I would be watching this. I would really, on this particular market, considering where we are, we're at quite a key area. For me, ideally on the Euro Aussie, I'd be looking at an area like this. There's a nice bit of selling pressure in here. See that area? I'm just finding out, so I'm getting something on here for you. Just trying to get something here for you guys. 1 minute. There you go. All good. There you go. Oh, sorry. There you go. See this area here between 147.23 and 47.61? Yeah. That area I quite like. That's okay. But I really want to see, I would like to see these lows broken. So I would like to see these lows broken at 45.63 because I'm sat where in a weekly area. If we break down these lows, that play would be very, very nice. However, if we do break these lows, I'd expect the trend to continue down to around 142.80. That's a nice market. Yeah. What's your take on a stop run reversal? I think they happen all the time. I think most of us know where stop losses basically. I think most of us know where the stop losses are. I think we just move our stops too quickly. That's the problem. I just think people move their stops. Do I have a list of criteria to validate supply and demand? Absolutely. That's what we actually teach at Online Trading Academy. We call it the odds enhancers. So I can validate a level and put all of this together as well. Absolutely. And maybe I'll go through some of those if I'll come and do another webinar, and I'll add some of those on as well. Pound yen, let's take a look, yeah? I'm not going to have time because I've literally got at the end of the time, but I can go through some of that checklist on one of our future sessions. Absolutely. In one some of our future sessions, sure. I can do some of that. Yeah, you're at near a demand zone right now. I mean, you've just triggered off of one right here. So it's getting to the end of the week now, basically. So it's getting a little bit challenging now, but we have right now come back to an area. But likewise, if we're not in any of that, I'd expect this trend to continue. But there's a real nice zone of supply that I'd have my eye on. A little bit higher around this area here, which is 17136, stops above 17160. Yeah. So there's an area right there where I'd be looking for a short position if the market pushes back up. But let's take a look at that daily. And yeah, the daily one's already triggered. So yeah, we'd like to see if this level holds. We'll probably push back up to around 173.36, where I'd be looking for a short. Lakesh, yeah, that's absolutely right. Yeah, so look, just so you can see on here, this is the short where I entered on the pound Swiss. So this is a pound Swiss short on here. It's currently up 87 pips, looking for this as a longer term move to break down on here. But yeah, just so you can see the Aussie New Zealand, what I was talking about, you can see here, this is where I last bought Aussie New Zealand. Where I got long, I'm up 212 pips on this at the moment. Yeah, of that, so 212. Looking for that continuation of that upward move on there. So, you know, picking these tops and these bottoms is it is safe to do. You just got to know what you're looking for with it, you know. But it gives me the breathing space now to be able to leave that trade alone and let it develop a little bit, you know. I would only go long if I had an entry signal, and at the moment, and somebody asked me, can I do these levels on smaller time frames? Absolutely, absolutely. But I like the bigger time frames because they're typically a little bit more reliable. Yeah. So focus only the levels, right? You don't really take into account end of month, which day of the week, which session. No, none of that. None of that. I let everybody else look at that. And I just focus on what the chart's telling me. Absolutely. Listen, at the end of the day, right, I don't know what everybody else is thinking about. I don't know what anyone else is thinking about. I don't know what all the, you know, everyone's got a different opinion on it. All I know is charts have key areas of supply and demand. I buy and sell near them, and everything else happens. I mean, this is my first webinar I've done with you guys for a long while, but I'll be coming back into some more, and I'm happy to go through this. I'm happy to go through this in more detail, but I just wanted to kind of, you know, in this first session, get you thinking about the bigger picture, give you a little bit of an idea of kind of what I look at as well. And you could kind of basically just, you know, get a little bit of a feel from where I'm coming from. But listen, I mean, look, let's do this. Why don't we do this? I'm not really seeing an entry on pound yen at the moment. I'm just looking. Ah, here we go. Should we pull back? Let's look at this. It's kind of gone already. There was an entry right here. But if we pull back to about this zone here, 69.91, stops below 69.77, I'd be happy to try and re-engage that for a long. Just remember, though, it is a Friday and it's getting into the end of the week, so I'd want you to be out by about 4 p.m. Okay? Yeah, so that's if you're just asking about the pound yen, guys. Yeah, right. There's also the daily chart. It's already triggered the level on the daily chart. Yeah, it's already triggered the level on the daily chart. That was the level right here. See, it's already triggered. So you'd have to try and wait for it to come down a little bit lower to ride it to the upside. Okay, Laksh? Listen, if you want to stay in touch with what I do, let me just show you. I'm going to do some more webinars here, but let me just show you where you can find me. Get me on tradingacademy.com. If you go to tradingacademy.com, lessons from the pros, you'll find that the lessons from the pros on here, I write an article every 2 weeks with Rick Wright. So, I write an article every 2 weeks with Rick Wright. So if you just go to tradingacademy.com, lessons from the pros, you'll find that the Forex article, you can subscribe to that and get me there. And also, if you want to follow me on Twitter, from basically June, I'll be doing regular tweets on there as well. And I'll just put my Twitter in there, in the box. It's at Sam Evans Trader. Let me put that in for you. And you can follow me on there, and I'll be keeping people up to date on what I'm looking at in the markets with that. Okay? At Sam Evans Trader. Look me up on the Twitter feed. Grab me in lessons from the pros as well. And follow me on there, and I'll be putting, from June basically, from the start of June, I'll be doing regular updates on there as well. All right? Thank you, guys. Thanks for your time. Really nice to be here as well, and I look forward to coming back and in the next few weeks and joining you again on FXStreet. FXStreet, thank you for having me too as well. All right, guys, have a wonderful weekend. Take care, everybody. Really appreciate your time.